To me, it's just my opinion.
I don't know what I'm talking about, and it does.
Things are breaking offshore. I mean, I say it all the time. In frontier markets that no one cares about, like Nigeria, Kenya, Ghana, currencies have been devalued by 50%. Things are breaking, but we just don't feel it here yet. And so this reminds me a lot of the mid-90s, but this time we're not as close to it as we were in the mid-90s when Asia started to roll over, Thailand, the Asian debt crisis, the tequila crisis of Mexico, etc. But nevertheless, it does feel to me to be quite similar.
Is there a long-term capital management? I mean, if you're going to go to the mid-1990s and you talk about something, if you're going to talk about something breaking, always the glue. He was basically leading it off.
I don't like to think so, Citadel. No, I'm kidding, I'm joking, I never said that. But what I would say is, look, there are big firms out there that are not necessarily your traditional hedge funds, your traditional banks, your traditional players, non-bank financial institutions, whatever you want to call it, shadow banking, etc. Yeah, there could be some pockets of distress that bubble to the surface when things get really tight. And I think what we're seeing across asset vol right now, Lisa, is the market valuations are finally responding to tight financial conditions. And we see that just alone if you look at rate vol, which is trading at a premium to equity volatility.
Honestly, we've been trying to grapple with what would break given how quickly yields have gone up. And we're talking now about the Bank of Japan potentially abandoning yield curve control. We're talking about the potential for economic growth in the engine and China rolling over. Jeremy Stein, the former Fed governor, who is very colorful with his words, said in a recent Bloomberg article, if you had told me 2 years ago that the Fed would hike by this much in such a short time, I would have said that they would leave dead bodies littered across the corporate credit landscape. I really don't have any good story to explain why things have instead remained so resilient. Are you saying that they're not? It just is taking longer?
First thing I'm saying is I have to apologize to Ken Griffin because Citadel's a wonderful company and they employ a lot of my friends and they invest really well. And I just want to apologize. I just got this vision of Ken Griffin calling me now. Anyway, no, I'm kidding. So the question was, I think, the resilience of investors in this environment?
Just in terms of when you talk about the emerging market complex, the fragilities that you're seeing, do they look akin to what people were expecting when you raise rates by 500 basis points in less than 2 years?
Yeah, no, I think so. I've been calling for this for a while. I think a lot of my peers have been calling for it. You can't really invest in EM local until the U.S. really starts to cut. And the U.S. seems to be on hold for a lot longer. And that runway seems to be expanding by the minute. So, I think that's why EMFX is on its back. EM local rates, they've given up so much performance in just the last month alone. And I think it's just
Robert?